When used correctly, options are a tool that can increase your portfolio growth in a massive way. Hey, what's good? It's your boy Matthew Michael, and in this video I'm going to brush the surface and briefly explain everything that you need to know starting out trading options. If you don't understand options at the end of this video, don't worry, because more than probably about 99% of people don't understand options when they first start out either. I know I didn't. So feel free to ask any questions you need down below in the comments. And while you're down there, be sure to like the video. And if you haven't already, be sure to subscribe and hit the bell icon so that you don't miss any future content or giveaways. Also, feel free to message me on Instagram and rewatch this video as many times as you need so that you can understand these basic concepts. Guys, there is a lot more to options beyond what I'm going over in this video, but guys, you just hit the jackpot. This is where you're going to find the best information starting out trading options. Why am I so confident saying that? Guys, I started trading options just 7 months ago. So guys, I know what it's like to be new, and I know what it's like to be in your shoes. My goal in this video is to make everything as simple as can be, and guys, I truly mean it. Down below in the comments, if you have any questions, no matter how stupid you think you are, the comments is a safe place. And if you still don't feel safe in the comments, message me on Instagram. I got you. Because guys, it is truly important that you understand the basics before you move on to making upper level plays. But without further ado, let's get into the video. Alright guys, I think it's important to start off answering the question, what are options? Alright guys, I'm going to read the definition. An options contract gives the owner abilities to either buy or sell a stock at a set time and set price. So guys, sounds pretty simple, right? Alright guys, you heard it correctly. An options contract gives you the right to buy or sell a stock at a set price and a set time. In this video, we're going to keep it basic and only focus on the two main types of options, calls and puts. And when you're looking at whether to get a call or a put, you first have to ask yourself, do you think the market's going up or do you think the market's going down? If you think the market's going to go up, you will get a call. A call is the options contract that you would buy if you think the market's going to go up. And if you think the market's going to go down, you would buy a put option. Seems pretty simple, right? If you're still following with me up to this point, hey, be sure to smash that like button so I know. I'm glad you're still able to follow up to this point because there's more. Options are derivatives, so the price of options contracts move according with stock prices. Each options contract is representative of 100 shares of stock. So it's important to know that when you see the price of an options contract, you have to take it and multiply it by 100 to get the price of the contract. So for instance, if you see the price of an option per share is 2 cents, the whole contract is going to be worth $2. If you see the price of an option per share is $20, that's going to be a $2,000 contract. So guys, this is just something that's important to know. Whenever you see the price, multiply it by 100 and that is going to be the price you pay. Also, feel free to take a look at some of my earlier videos so you can see what options trading looks like, or maybe just take a look around and see what it looks like on different platforms. Like I said a moment ago, the price of contracts move accordingly to the price of the stock, and because of this, contracts can actually be traded just like stocks. The only difference is there's an expiration date for contracts. A stock will never close out unless the company fails for some reason and goes to absolute zero. But the difference between this and the option is options are only good to a certain date. And because options expire, this makes them decaying assets, meaning that they lose value as time goes on. An option losing value, also referred to as time decay, is measured in the Greek letter theta. This is just one of the factors that play into the overall price of an option. Y'all be sure to subscribe and hit the bell icon so that you don't miss any updates. I will be making a video on different factors that affect options and you won't want to miss that. So be sure to subscribe. One of the great things about option is you get to pick your own price. And this price that you get to pick is referred to as the strike price. And what the strike price is basically it's the agreed upon price between the buyer and the seller at what the buyer is going to sell it for and what the buyer is going to buy it for. This is if the option expires in the money. If an option is in the money, this means that it is favorable to the buyer of the contract. So if you picked a stock and bought a call for $100 and the stock expires at $105, the stock is considered in the money. Anytime the stock is at $100 or above, it is in the money. And it's not $100 or above that makes it in the money for every stock. It depends on the strike price. So if you had a strike price of $75, if the stock is at $75.01, it's in the money. Anything in the money, you're going to be able to exercise that option. And the same goes for being in the money on the put, but it's just in the opposite direction. So instead of a stock above $100 being in the money, now the stock being below $100 is in the money. For a put contract with a 100 stock price, anytime it goes below $100, it's in the money. And the further in the money it is, the more money the buyer makes. Now on the other side of being in the money, there's also being out of the money. And as you could probably guess, this is the exact opposite. So if it's not in the money, it's out of the money. So if it's not on the favorable side, it's on the unfavorable side. If you have a call for $100 and it's below $100, it's on the unfavorable side. And if it expires out of the money, the buyer of the contract loses his money. This is part of the reason options are considered to be so risky. You can basically look at an options contract as a bet between two investors, one who thinks the market's going to go up and one who thinks the market's going to go down. Options and bets are the same in the way that there is only one winner, one person has to pay the other, and that there is one factor that decides who wins the bet. And the factor that decides who wins the bet at the expiration date is the price of the stock. The reason that it's like a bet is there are actually two sides to options. There's an option writer and then there's an option buyer. And what the option writer does is they're the one who opens up the contract. They're the one who has the shares to buy, or they're the ones who are going to buy the shares. They're the one who funds the initial transaction. And that's all I'm going to say about that subject, because I want to keep that simple right now. I want to keep it basic for you guys. And then the buyer is the person who comes in and buys the contract from the writer. And in the buying and selling of that contract, they form an agreement. An agreement that one of them has to pay the other at the expiration date of that contract. And as a buyer of the option, because options contracts are similar to stocks in the stock market, the buyer can actually sell the contract to another buyer if they decide they want out of the contract. They can sell it if the contract goes up, they can sell it if the contract goes down. There are actually several people who don't even exercise the options and just buy and sell contracts, and that's how they make their profits. But like I said earlier, options are decaying assets that are always working against you. So it's important to learn as much as you can to minimize your risk. When used the right way, options are a tool that can massively accelerate portfolio growth. So I want to know, why do you want to trade options? Comment down below, and also while you're down there, be sure to give this video a like, and if you haven't subscribed yet, what are you doing? Be sure to subscribe and hit the bell icon so that you don't miss any future content or giveaways. I post a new video every Saturday, and I would love to have you as part of the family. And also guys, just a reminder, if you don't feel comfortable commenting down below in the comments, feel free to hit me up on Instagram at Matthew the Martian. Don't even ask, I made the Instagram when I was 14 years old, never changed the name. So yeah, I hope you guys have a wonderful day, and peace.